Yo, what is going on, guys? It is Will back with another YouTube video. We're gonna be doing an NQ recap, one trade taken today, and then as well we're gonna be talking about a stock that's been making moves in the market, and it's quieted down a little bit, and I really think it's a good time to start investing. Obviously, this is not financial advice, but my niche is equity. Equity is going to be long-term or, short-term. Just anything over a year, in my opinion. But I think equity is great. Being partial owners of a company is awesome. And it's something that we can do. And we can learn how to make a decent amount of money doing it. Even if you have like a couple dollars to invest every single day, it's still a great start. So we're going to be talking about NQ real quick. Going to be going over the trade that I took. So, immediately my bias today was I thought NQ was going to rip up. I thought NQ was going to rip up to previous day high and then sell off. I got my daily bias somewhat right, but we didn't immediately hit previous day high. We actually hit it later on through the PM session, but I saw a really good setup on a short. As you can see, like the risk to reward ratio is not here if you do plan to go long, like, for example, it's still 50 points, right, if you do enter a long up here, but this is just not something I was looking for. I saw a better risk reward ratio for shorts, so that was my reason for shorts. And my own fault is I didn't take partials out, which I definitely should have. But I caught a beautiful SMT up here. SMT up here formed a 15-second break of structure to the downside. I immediately entered. And I almost top-ticked this thing. So it was a very, very nice trade. We got some selling pressure. This 50 level is a very key. This 450 level is very important. We've bounced here a lot at this 450 level right here, right? This 460, 450 bounced and rocketed. So this level was very important. It was a key level where I wanted to see we go through and actually come down to the lows. And obviously I expect to be, consolidating now until election time, not any big moves, but if we swept this 450 and we pushed under it and closed down below it, I was definitely looking for potentially more sell side. So I was in this trade for a while, guys. 10:15 I got into the trade, and it finally closed me out at 13:30 with a loss of, I think, 20 ticks maybe, something like that. But price was just chopping around over here in this range. And then we finally broke to the downside in the afternoon. And once we closed below this low, we rallied back up, came up here, and then just sold back off. And I immediately thought we were going to see lower lows. I thought we were going to go to these lows over here and maybe even the previous day lows and then bounce off there. But market does what it wants to do, right? And it rallied and took me out. So I guess a learning lesson is, I could have taken profit. Maybe at the 450, if I took a little bit of profit out, it would have been 65 points, but I was looking for a pretty big move today. Didn't get that one, unfortunately. It is what it is, right? We just have to take it day by day. But other than that, one trade today, I can't complain, and I'm going to definitely be only doing one trade a day. If, mostly two, that's about it, because this market is just not... There's a lot of people getting stopped out on 20-point SLs, and the price is going to go that way anyway. It's just a lot of choppiness, and besides, Monday actually was some really good price action. We got a big rally up, a big sell-off, and then another big rally up. Really good price action here. But Tuesday, unless you caught longs here or you caught the longs here, you caught the short here. Price action was decent, but Wednesday is going to be like this probably again, and Thursday we're going to have some news on employment. But other than that, I'm probably going to go lightly traded just because election. It seems like, market just wants to consolidate. If you look at like the 1 hour time frame, just look at this. Like, just doesn't look good. This is not something, I'm not good at range trading, so this is teaching me a little bit how to range trade. Like this is trash right here, this is all trash, this is all trash, unless you catch these big sell. But like this was a new sell right here. This was another new sell. These were war sells, I'm pretty sure. But yeah, prices, you know, it's just not been, you know, moving the way I want it to, and I got to start looking for these shorter moves. But I do want to make some money at the same time. Yet again, I should secure like $300 and just call it a day sometimes, which I should be doing that. But, you know, it is what it is. We learn. But let's talk about a stock that I'm actually going to start. I started dollar cost averaging into. So the stock is actually going to be called Baba. If you don't know what it is, it's a big e-commerce store. Like a lot of people use this for drop shipping, etc., stuff like that. But this is a top 50 company in China. This stock is located on the New York Stock Exchange, so you can buy it, but it isn't included in the S&P 500. Why? Because the S&P 500 is only U.S.-based companies. So any companies that are, you know, in China, you know, England, you know, any of those other countries, they will not be in any index in the USA. Besides certain indexes that do have exclusions, but something like the S&P 500, it's only US-based stocks. They want to keep it like this because the stocks performing are showing how good the economy is. So if you take a look at something called the HKSE, this is the Hong Kong's basically one of their main indexes. So if you take a look at it on the yearly, right, you could see it bottomed out at around this 220 area. If we take a look at, you know, the daily here on Baba, it looks very similar. See, this is a peak right here. This is when Baba peaked up. So they flow together. So I think right now it's a really good time to start dollar cost averaging into this stock. This company isn't going away anytime soon, and I just think right now is a great time to buy, especially if you miss this area over here. I did have option calls a while ago, guys. I mean, a while ago I had option calls. I got into option calls, and I rarely do options. It's kind of just like margarita money. I like to fuck with it sometimes. But we saw a big rally on Baba, right? And we saw the Hong Kong index coming up. And then we bottomed out around the 70 area. I got into an option call for $100 strike price. I sold a little bit early because the price was just chopping around and it was decaying on me. I had to get out. But then China decided to cut rates. Well, what happens when you cut rates? Well, money from the bond market, right? Because if rates are cut, all the big money that are collecting interest on bonds, they're losing percentages on their bond yields. So what do? They take the money out of the bonds and they start moving into the stock market. This is a simple way of how big market movers like to use interest in their favor. If rates are super high, they're not going to have their money in the stock market. They're going to have less risk on the table because they're going to be invested in bonds that are gaining 5, 6, 7% yields. Now, if rates are starting to get cut and they plan to cut more rates, what they're going to do is they're going to take their money out of bonds and they're going to start putting into the stock market. Just how we saw in our economy when we had the rate cuts. What happened? NQ started ripping up. This was, I believe, this area right here. We had rate cuts somewhere around early September. We had rate cuts go into place, and look what happened since. It's very, very normal when rate cuts do happen for money to move out of bonds back into the stock market. They do have a negative correlation. So if one goes up, one goes down. If one goes down, one goes up. That's how they work together. You can look it up yourself. That's exactly how they work. But the purpose of knowing this information is well, usually when big countries like to cut rates, other countries will follow. Reason being is inflation is a very big thing, and it's a very big topic that's talked about now because of the pandemic. Most countries experience inflation. So now a lot of people know what inflation is, but not a lot of people did know that the USA actually averaged about 2 to 3% inflation per year. nobody even knows that statistic. Everybody's talking about inflation now because we hit 8% on inflation. We're not at 8% anymore. We're probably around the 2.5%, I want to say, inflation, somewhere around there. That's why they cut rates. But inflation's back down. Obviously, we won't feel any after effects for the 2% for a little bit here. Maybe another year we'll start feeling a little bit better, unless inflation stirs back up. But what usually tends to happen, right, is a country, like a big country like China, will cut rates. What will happen is United States will follow what China's doing. Vice versa, the other way. USA cuts rates, China will cut rates. The reason being is because usually when a country experiences inflation, their currency, their actual currency, will experience inflation. Well, what does that lead to? Well, when they're exporting and they're importing from different countries that aren't experiencing inflation, they're actually going to carry their inflation over to the other country. It's basically like global inflation. That's how it works. It works through importing and exporting, and especially that, China is one of our biggest exporters, right? They export us a lot of stuff, and we buy a lot of stuff from them, outsourcing, so we experience that inflation that they have. So if they're cutting rates, we should cut rates too. It's kind of just a mutual correspondence thing, as it should be done, so nobody experiences very harsh inflation, because that can get out of control very quickly. But yeah, I do like Baba as a stock overall. I think it's a great buy at $100. I think it was a better buy at $70. I missed that. I should have been buying equity. I messed up. It is what it is. You can't win them all. But I definitely turned it back on at $100. That was my strike price. Meanwhile, we have NVIDIA rallying all-time highs. This thing is just going to keep rallying, guys. Be careful when you're doing options, right? I would stay away from options completely out of NVIDIA. You don't want to get caught buying a call and it sells off. You don't want to get caught buying a put and it keeps pumping, because we don't know where the next ceiling is. There is no ceiling. There is no resistance. You can't short all-time highs. You cannot short all-time highs, just like gold. Don't be shorting these all-time highs. You're supposed to be buying, if anything. But yeah, I set a signal for $100 to start buying. $100 to start buying NVIDIA. If you started buying NVIDIA at $100, guess what? You are up 44% in about 2 months. I don't know, is that good? Yeah, I hope. As we take a look at Boeing, another great company I'm invested in. Our average cost in Boeing is around $152, I believe. So we're looking at a 7% gain in about a month, which isn't too bad. Look, guys, anything that you average over 12% in a year is great. Obviously, including your losers, because you are beating the S&P 500. The S&P 500 does average about 12% a year. If you're beating 12% a year, you're beating the rule of 72, which means your money doubles every 6 years. So you want to beat that 12%. Me, for example, I've been investing for about 8 years, and I average about 20% per year. So what does that mean? Well, if you take the 12% and you multiply it by 2, that's 24%. That means my money would double every 3 years on a 24% interest rate. I'm gaining about 20%, so my money is probably doubling around every 4 years, which is very, very great. That means you could flip 10K, into 80K in about, I don't know the math on that. Fuck, too much math. I had a long day at college, but you get the point. Make your money work for you. It's very simple. If you have any questions about any type of equity, or you want me to look into a stock for you, I'd be more than glad to. I love learning this stuff, and the only way getting better is by actually doing your due diligence on individual stocks, even if you have a bias towards a certain stock. A lot of people have a negative input on Nike, but Nike today just signed a deal with the NBA for 12 more years of sponsorships. This company is not going away. There's no other competitor. The competitor is Adidas, right? But look, Nike's not going away. If you haven't started buying Nike equity, now is not a bad time. They have a new CEO. Earnings already came out. Earnings did great. They beat expectations. So yeah, I mean, I think Nike's a great buy even right now at $80. We could definitely see this thing rally back up to, you know, over $100 easily. But if you take a look, right, the biggest point is to zoom out. All-time highs 180. You hold this thing for a year, it's probably going to be 130, 140 up here somewhere. So these are just great ways to make your money work for you. And other than that, I'm going to get out of here. Tomorrow we are going to trade a little bit. Not going to go too crazy because it's probably going to be choppy and it's going to be very annoying to trade. But other than that, I hope you guys have a great rest of your day. Keep in mind, Boeing earnings tomorrow, Tesla earnings tomorrow, and also Boeing has the vote for the union, so we're going to find out if they're going to accept Boeing's deal or they're going to continue and drag this on. Hopefully this union thing gets finished with, and then we can move on and continue on about our day. But other than that, I hope you guys have a great rest of your Tuesday, and I will see you guys Wednesday. Later.